first chart I have on the screen. Biggest news announcement coming into the week is Nvidia. Not that it is right in the middle of this range, which it basically is. I'm not even talking about the fact that it's literally where it started the year out at. I'm not even going to discuss it for the last, 6 months? It's gone practically nowhere. No. Today, we're going to talk about what's happening this week. Earnings are coming out for Nvidia. There's been a lot of consolidation in this stock, and I want to give you kind of a preview of what we see with earnings. Plus, where do we see this stock going immediately after earnings? That's what I want to answer for you. So, earnings are expected on Wednesday, February 26th, after the market closes. Here's a couple of quickies for you. Analysts are expecting about $37.5 billion, and that's pretty much in line with their own guidance. And of course, the analysts are giving you a plus or minus 2% either way. Earnings per share estimate is around 84 cents a share. The range is 81 on the low side, 95 on the high side. Let me tell you, even at 84 cents, that is a big jump year over year from the same time last quarter. And the key drivers are basically that their projections are fueled by strong demand for their data center segment. Now, there's some interesting things that popped up over the weekend that are probably not going to have anything to do with earnings for Nvidia today, but it could be something that could be a catalyst for future earnings. And that was the cancellation of data centers by Microsoft and whether that has long-term impacts on Nvidia. And so that might have a little bit to play with the stock's future price. So I want to talk about future price. I want to talk about how we can look at expectations after earnings. So with all this consolidation, with this 6-month consolidation we've seen, many are expecting a breakout if we get anywhere close to that expectation, right? Because it's such a great expectation, such a great earnings when you look at this quarter versus the first quarter of last year. The bears, however, because of what they're hearing with data centers, with the cancellation, what happened over the weekend with Microsoft, and the anticipation, that rollback anticipation or overestimation of AI projects, the bears think we're going lower. Here's how you and I, can accurately predict the range coming out of earnings, and therefore, based on these predictions, to give us an idea whether we want to be a buyer of options or a seller of options. This is what I do. I actually use the options to help me get an idea of where the price are, but it's not maybe the way you think it is. So this is I just brought this up before the market opened. These are the near-term at-the-money options for Nvidia. All right, and I'm looking at the 136 calls and the 136 puts that expire this Friday. So you want to take the options that are the nearest to the money, the calls and the puts, and you want to take these options that expire as close just after the earnings announcement, as close to after the earnings announcement as possible. So these options expire Friday, February 28th. If you take a look at the mid-range prices, we're talking about $5.38. That's for the Nvidia 136 calls that expire Friday. The Nvidia 136 puts are $6.95. All right. Now, the reason why you look at these and you can see, there's a little bit of one slightly in the money, one slightly out of the money. You add these two numbers together, add the price of the calls, add the price of the puts. What are you going to get? Well, I added it up as $12.33. Call price plus put price. That gives me what's called the straddle. Now, a straddle is when you're trading an at-the-money call and an at-the-money put, all right, together, and we're looking for really non-direction. But I'm not looking to trade the straddle here. I'm using the straddle. Okay, I'm going to use the straddle to give me a number. And I'm going to take that number, that $12.33, I'm going to add it to the price, all right, of Nvidia, and I'm going to subtract it from the price, and that's going to give me the range, that expected range that Nvidia should fall in between now and Friday. So if we add those, roughly, we're talking about the range. If we get to Wednesday and we're trading at where we are, right now, 130, that closed 134.43, then we're looking at a range roughly of between 121 and 147. That's $12.33 above and $12.33 below, and I rounded it to make it easy, based on the option prices above and below Friday's close. Now, that's going to move around a little bit between here and Wednesday, but that's roughly how option traders look to price the stock. They take the at-the-money call, the at-the-money put, they add them together, and they take that number and add it to and subtract it from today's stock price prior to earnings. So, folks, that's how easy it is to get an idea of where any stock is likely to go as we head into earnings. Now, for Nvidia, what I did was I looked to see, are there any patterns prior to earnings? There are none. But this is interesting. 3 of the last 4 quarters, Nvidia was up 10% just after earnings by the end of the week. This week's options confirm a 9.5% move by Friday's close. And if you're going to trade direction, if you are a bull on Nvidia, or if you are a bear on Nvidia, you can take all this information I just showed you. All right, implied volatility is a little bit on the high side going into earnings. Not the highest I've ever seen, but it's definitely not cheap. So you want to trade direction after earnings, or you want to trade through earnings? Being a seller of premium makes sense, and that doesn't mean you have to just go out there and sell puts if you're bullish or sell calls if you're bearish. A simple spread, a bull call spread if you're bullish, a bear put spread if you're bearish, a simple spread will help you hedge cost and risk, hedge volatility, and also increase your probability rather than simply buying a call or buying a put if you believe something like Nvidia is going higher.